Will the stock market continue to run higher or lower? That's the question, and that's what we're going to get into in this video. So, a couple of days ago, the stock market looked really, really good. It finally felt like, hey, you know what? We got our legs under us. We're finally starting to move higher. And I was going to come out with a technical analysis video on the overall markets and kind of talk about how high will the market run or will we continue to run? Um, a key area that I was looking for on the overall markets, looking at the triple Qs, which is the NASDAQ 100 ETF, I was looking at this level here, 366.81. The reason why I was looking at this level here was due to the fact that this is the 200 moving average. This is like what you would call the granddaddy of them all. If the stocks are going to go higher, if you're going to get any sort of momentum, they need to be trading over the 200-day moving average. Okay, so that was step one: reclaim the 200-day moving average and then start making baby steps back up towards the 50. Generally speaking, technical analysis, if you have stocks that are trading below the 50 and below the 200-day moving average, the sellers are going to have control. So any bit of green that you get, any pop, any 1-2 day rally can easily get sold off on aggressive volume. So going into this week, the stock market looked really, really good, approaching this 200-day moving average. And as we got into this area, we started to stall, which is to be expected. Yesterday, we did have some news from Fed member Bullard, who came out and said, you know what, I think I want to raise interest rates, or we should be raising interest rates, 100 basis points, get to that 1% by January, or by July. And that really, really spooked the market, because the market right now is in so much uncertainty. Bulls don't know if we're going to go higher. The bears are trying to drag the market lower. We don't know what's going on with inflation, with the interest rate hikes, supply chain issues. We also have new news coming out with Ukraine and Russia. So a lot of uncertainty in the market, and a lot of the market, has big players have their money on the sidelines. So with that news, we were aggressively sold and rejected at this 200-day moving average. And there's no coincidence that we came up to this area 2 days in a row, and they were kind of pinning us in this area. They were pinning us right here at the 200. He released that statement. He released, that press conference. As soon as the headline started to break news, it really started to, put some fear into the market. The market started to sell off. Now, coming off the back of CPI data numbers, I thought that the bulls did a really, really good job in kind of absorbing that blow. We knew that inflation was going to come in hot. We knew that we were going to come in a little higher than expected. And the bulls did a really, really good job. It wasn't until later on in the day, when those comments came out, that the market started to sell off very, very aggressively. So coming into today, we were actually green in the pre-market. We did try to make an attempt, to test those pre-market highs. And then you started to see the market started to roll over, and it got weaker and it got weaker and it got weaker. So the area that I was really looking to hold, first area being 356, and that area was clearly broken down. The next area was last week, if we or earlier this week, and the end of last week, we can kind of see that, we were really chopping around in this range, this consolidation range. This is what last week, what was called a distribution cycle. So meaning that money was exchanging hands between bulls and bears, and we really could not choose a direction. We were coming off the bottom. We had a big, nice dead cat bounce. We did gap down, and then we just sort of consolidated literally all week. So that next area that I was looking today for the Qs to actually hold was 351, 350. This was going to be a big, big level that the Qs and the bulls needed to hold if we wanted this market to continue its uptrend and see if this market can continue to run. Sure enough, we get more headline after more headline. Now there's talks about Russia possibly invading the Ukraine, the UK talking about pulling out people. It's a complete disaster. One thing that the market does not like is uncertainty. And anytime you get any bit of uncertainty, which that's where we're at right now, you are going to see high volume days, with the volatility and the VIX being elevated. What I do want to notice here, if we look down at the bottom of my screen, the days where we were kind of consolidating, the volume was extremely low. So even on the green days, the volume was extremely, extremely low. So that's one thing you always want to take notice on. So if I kind of bring out my drawing tool here, and if we can look from this bounce that we had to the consolidation, we can see coming off selling that volume was low, right? So if we actually draw like a little trend line here, you could almost assume that if there was any bit of selling pressure and the volume was increased, that they were going to blow through these levels that we needed to hold. And sure enough, today and yesterday increased volume. So there's more selling coming in than actual buying. So even though we're getting these 1-2 day rallies, yes, they look good in theory, but there's a little bit more going on behind the scenes. So anytime we get that increased volume, it's typically coming through on the bear side of things. So if we can say that this is our active top and we were consolidating in this range, we could say that this would be our first leg down, right? Normally, the point I'm making is a correction normally comes in threes, right? So if this was our first leg down and this is our bounce, if this was our second leg down and this was our bounce, then all this was just consolidation, because you can see we made our first high, our lower high, our lower high. This is all consolidation. We never actually broke through that 200-day moving average to kind of change momentum and change the direction of the way that the stock market is going to flow. So when we get this next pullback, we could be looking to come back into the territory of 335 to 340. But if the mantra is true about corrections come in three waves, then essentially this is going to take us down to this area, consolidate before we put in this third leg down, which would be a complete bear market and a full correction, and no telling how long it's going to take us to actually get back to where we want to be. The longer we spend collectively as a whole underneath the 200-day moving average is bad, okay? It's bad for stocks. It's bad for the overall market. It's bad for the bulls. Anytime we are staying underneath the 200-day moving average, this is showing more weakness and more weakness and more weakness. So I'm expecting maybe going into next week a little bit of a bounce, consolidation, and I will be expecting a flush. I will be bearish going into next weekend, looking to trade to the downside. Any bit of pop, I'm just going to kind of let them ride. It doesn't really matter, because for me, until the bulls can really reclaim the 200-day moving average over 366, I'm not really looking to touch anything to buy long right now. But just because we don't know if this is going to be the short-term bottom or not, that is yet to be determined until we actually come down here and test this level. Guys, I hope you enjoyed this video. Please do me a favor, subscribe to my Discord. That link is down in the description box below. Also, do me a favor and give me a thumbs up, leave me a comment. Make sure you hit the bell notification on my channel, and I will see you guys all next time.